Yo, Dre, let's kick it on the one, black, and we don't stop. Making records so people are cold, checking and respecting, and because it rocks, the sales won't stop. Those of the doctor. And I'm the diggy doc, y'all. Pumping it, yes, y'all. D.O.C on the set, big kicking fresh, y'all. Letting the bass G.O and flow with soul so I can play. Leaving the rest of DJ Dr. Dre. It's the diggy doc, y'all. When I hear a bass drum, I gotta get dumb, though some think it's a fable and label me not able to come. Cold correct, so I jet back to my room and invent something to compliment the boom of a kick. Cause I want it all like in Monopoly, the great old make not a mistake. Make sure it's properly done, strictly for public satisfaction. So you're in all when I'm in action. Cause overdue for me to you was a song strong, bumping the tension from the system upon. I deliver something to shiver your peak level. And if you want it deeper, try yo, go get a shovel, yo. As you pump it, your speakers rattle. This is all over the world, but without a satellite, the right, I hype the mic, make it dumb, and Dre is the engineer behind the drums. It's the diggy doc, y'all. I want you to turn up the radio, listen to the lyrics, and I'll let the bass go so you can hear it. Bumping your speakers are thumping, dig it, yeah, you like it. You know the album, get it, and I keep producing and inducing a rhythm with a style that makes you get loose and sweat. Cause I'm as good as you've gotten yet. Sunset it can handle. You wanna bet? Bumping, dig it, yeah, you like it.
Okay,
You
I
know
got
the
double
album.
audio playing there. All right. Hey, it's Delay, and this is episode 285 of the Orange Pill Investor. And today I want to talk about some dumb shit I heard in a podcast recently. And it was in Orange Pill Investor. I think it was 281. And it was said by yours truly. And what I said was in relation to when they just came out with these 760s. They might have over the 760s now. Which one did I buy? The 720? Or excuse me, sell the 720? I think that's what it was. And I thought, holy crap, the prices are like insane. I went out to 45 days, so probably it's 40 days to expiration now. But I was out here and the prices were like 1,800. And so that was like over, if I manage out 2 weeks at 50% of what I sold it for, that would be over 1% a week, like at the very, very tippy top of the orders chain, which was like, I don't want to, it was at least 1.5 times what the options prices were just a week ago. And what I said was, oh, they must have repriced the options. And I think that wasn't very smart. And the reason I say that is even though there could be some market manipulation, like, maybe they've got enough money to move the market in a certain direction that they want it to go, I don't think they can really just reprice the market. They can't just go in and say, hey, you know what? I think the price of these options should be this. Now they can go out and they can provide a bunch of liquidity, right? They can set some bid and ask spreads, or some they can offer some buys and some asks. And I'm not like an efficient market hypothesis guy necessarily, but as far as I can tell, a stock price is the combined activity of all of the buyers and sellers. If everybody that wants to buy the stock outweighs the amount of people selling the stock, then the price goes up. Same thing in reverse. And so the same thing is true in these options. And I know there's the Black-Scholes model, and there's a bunch of other models too. And My my workout my workout audio when I got my headphones in is like options video and True North videos and Bitcoiner interviews and shit like that. I'm not listening to heavy metal or anything to get pumped. So I listened to a bunch of like how to calculate implied volatility videos and whatnot. And it was a good reminder because I was already aware of this, but it either slipped my mind or I just kind of got complacent and I started thinking about the market as like a person. Sometimes it's like, okay, you need you need something to go out of the money or in the money to profit on a trade. And it just seems like the market is out to get you. It kind of almost just seems like the market is a person and they're just out there trying to fuck you over. And that's kind of the trap that I fell into with this, I think, a little bit. I I said, oh, that they must have repriced it. Like they were scared that MSTR was going to go over 760, so they made the options more expensive. But what I think might be more accurate is that when they came out with these, they keep coming out with more strikes and more strikes and more strikes. And I think as soon as the new strikes are available, I think maybe people are just running straight to them and buying them because they're the cheapest ones. And I like to try to be specific about what I know versus what I'm just guessing about. And this is kind of a guess, but I would be willing to bet that since MicroStrategy is so expensive and these damn options have been getting so expensive, that people who are just trying to squeeze a couple of pennies together but still want to FOMO into this thing, they might just be on the sidelines until they come out with these higher strikes, which are cheaper, and then people are just rushing into them like, oh my God, I can finally afford some of these long calls. So it wouldn't surprise me if these things are, I don't want to call them overpriced again, but they're definitely getting more expensive. That's for damn sure. And so this might be a run onto a little tangent. So when I jumped into the Januaries, how long ago was that? So I got these Januaries. I've had these on for 23 days and these for 17 days. So when I ran into these, they had closer to, was it 60 days plus 20? Yeah, closer to 80 days to expiration. And people are going to continue as MicroStrategy's price runs up. They're going to continue to FOMO into this and FOMO into this and FOMO into this, but everything runs into resistance at some point. So you back in March, or was this February? Yeah, February, March, you could have FOMO'd in to MicroStrategy right up to about 170, and then you'd have to endure this little dip here. But your 170s would have probably still been fine if you had a long enough expiration to get you to through 328. You might have made some money, but you have to make enough money to go above the strike you've chosen. Every strike has a break even. So even if I buy into these 40, I sold this one, but just for example, if I pay $1,200 for this 760, my break even is 772. So just because I get to 762, I still lost $1,000 because I can exercise for 760. I make $200, but then of course I spent $1,200 on the thing. So it has to get to your break even price and then above. So some people are going to FOMO into this and make money. The people who FOMO into it early enough. And this is going to be a little bit of musical chairs, I think. But some people are going to be FOMOing into this right up until the last minute. I mean, there's probably going to be some 0 days to expiration activity happening on this thing as well. So I think I kind of misspoke when I kind of made it seem like the market makers are doing something, nefarious or whatever, or manipulating. Now they could probably go out, and if they want the prices to go down, maybe they could manipulate it by like offering more, a bunch more liquidity on the sell side than the buy side. I don't know. I read a few articles that said that the third Friday of every month is the monthly expirations, and there will be like a mid-month pump. And then this guy claimed that the market makers, in order to push some of the long calls out of the money, they'll apply some short pressure. And I can't say for sure whether that's happening or not, but I think that's a little bit different than this kind of sudden increase that I noticed. I mean, it literally happened overnight. I can't remember if it was Tuesday or Wednesday, but I noticed a sudden increase. Now, MicroStrategy's IV rank had leaped up to 85, and this is a good time to clarify as well, because even in my videos, when I did my videos explaining the Greeks, and when I talk about the Greeks, and a lot of people will say this, they'll say that delta is the amount of, if the price moves up $1, then the price of this option will go up by this amount, right? Will go up like $14. But that's just an expectation. So it's not that you can put together the delta, the theta, the days to expiration, and the implied volatility. I can't remember. I think there's one more factor. So there's time, the underlying price, implied vol. Anyway, doesn't really matter. But you can't just, you've got the equation, right? But you can't just put together all of these Greeks and all of these values, and then it spits out the option price, and that's what it is. But that's kind of the way that we talk about it, and that's not correct. So the people who are out here buying and selling this strike, the 32 bids and the 15 asks, the volume, the open interest, all of these people out here, they are the ones that determine that this is the price. It's the combined buying and selling activity of this option is what determines the price. And then you actually put this price into the model, and then at that point, it spits out the implied volatility. So a lot of times we'll say too that implied volatility, when it goes up, it increases the options prices. And that is not true. The price fluctuating is what causes the implied volatility to be higher. So it's kind of reflected backwards, really. And I think that's a little bit of a misnomer. Like, we think all of these Greeks affect the options price, but it's the options price that's really determining the implied vol, not the other way around. You can't just be like, okay, I'm going to increase the implied vol and spit out a new options price. And here's a good example, right? You could have all of these Greeks and the implied vol calculated, and if there is no one here to buy this option, the price is zero. If there's nobody willing to buy it, the price of this option is zero. It doesn't matter what delta is, gamma. You can plug that into the Black-Scholes model all you want, but if there are no buyers, there is no price. There can be a bunch of people that want to sell it for $5,000. You can have a shitload of asks out here, and they'll calculate a mid price that doesn't exist. But if there's no bids, then the option price is zero. I don't give a shit what the Black-Scholes model says. All right, let me check out the chat. So AI Gone Wrong says, when the spot moves up, exchange adding more strikes makes sense. I prefer to see strikes out to greater than 2 standard deviations per IV, or else we have an incomplete view of the market's view on the underlying. 40 days to expiration, 760 call is 2 SD out. Strike 640 for tasty trade, but delta is 0.15, meaning 15% chance of hitting 760. Yeah, I generally use delta as an approximation for how often I should be successful on this too. But again, it's just them guessing. It's probably pretty accurate most of the time, but as AI was mentioning, these are all within standard deviations. So, 68% of the time, this will be probably right on the money. And then, what is it? 2SD, it's going to be like 95% of the time or something. It's going to be within a certain amount. And then 3SD, it's going to be within another range. So this is still all just kind of a guessing game. Which brings me back to a video that I saw, and I really want to go over it again. He was looking at the Januaries. And I tried to figure out why the guy was wrong, but the math checked out. And so and this is after hours, so the price of MicroStrategy has probably changed. So these are not going to be accurate until the market opens again. But what I double checked looked like it was very similar to what he was saying in the video, and caught me a little bit off guard. But this long call has a let's just call it a 0.28 delta. So there's about a 28% chance that they're estimating that this is a 28% chance that this will go in the money. Right? Now, if we formulate a call debit spread, and we go up here and we sell a cheaper one, and this one's about 0.23. So the difference between, was it 0.28 and 0.23 is 0.05. So the net delta on this is 0.05. And he's basically saying, look, this is only going to cost $500. And if we look at this, the break even is at 605.20, right? The 600 strike plus the 500 we paid, and then it starts to go into profit. So either this is accurate or it's not, right? Either this is not accurate, or excuse me, this is accurate and this is one hell of a good buy, or this is not accurate and it's actually the price that's accurate and this delta is way the hell off. If we just look at the math, let me just bust out my calculator. And since really it's right around the 650 strike was when we can make, half of the profit. So if I'm going to look at the 650, we're going to use this as our target. It's just easier math here. This is a 0.25 delta. So if 25% of the time, so let's say we run this 100 times, that means 25 times we're going to make, what, $5,000? That's 125,000. And then 75 times, we're going to lose what we paid. 500. That's only 37,500. So that's like, what was it? It's like 5 to 1. 5 to 1 odds. And so I was like, holy crap, the guy's right. If this is accurate, then that means we should lose 75 out of 100 bets, but we're only going to lose $500, and we should win this bet 25 times out of 100. And just assuming at 650 is like half the profits. But I mean, if it goes over, like even the 700 strike is at like 0.22 delta. So that's closer to, 78% of the time. So I'm sorry, yeah. So 22% of the time, sorry. So 22 times out of 100, making the full like $9,500 is like 200 grand. And then, what's it, 0.22? 22 times, losing the 500. That's a pretty crazy asymmetric bet. So I'm going to play around with these and I'm going to look at some other combinations of strikes. But if this delta is accurate, then a call debit spread like this is very cheap. Not financial advice, and it actually does make sense because the way I'm an option seller, right, is my how I got started. And if I had this, reversed, I would, let's just do it, right? If I wanted to sell the 600 and buy the 7 because I wanted to put a call credit spread together, I'm bearish, doing it this way. Then, and I had a whole spreadsheet where I would plug this into the Kelly criterion formula that gamblers use, right? So if there's a 30% chance, it's 28% chance. Let's just say 30 because it makes the numbers easier. If there's a 30% chance that I lose this bet now because I'm flipping it, right? This is a short position. Then I need to get paid more than 30 cents on the dollar for this. So I would need to get, in order for this to be, to pass the Kelly criterion test, I would need to get paid at least $30 for this. This is a $100 spread, so there's 10 grand at play here. So I need to get paid at least 30 to even make this make sense as a seller. So if this makes no damn sense whatsoever as a seller, intuitively it's like, okay, well, maybe it makes sense as a buyer. But it broke my brain a little bit. I thought there's no way that this spread could be giving like 20-1 odds. It just seemed weird. But I ran the math and it pretty much all checked out as far as I can tell. And I'm just double checking it right now for the video, and it's still all jiving. Now, I think the guy was wrong because he mentioned something about this was explained by volatility skew, and I think he had that potentially wrong because as far as I know, volatility skew is comparing the calls to the puts. So and he even linked to a video about vol skew, and I watched that one, and I was like, no, I think that's calls and puts. So I don't know if he was using the wrong term, and then there's maybe another term that talks about, I don't want to say mispriced, because whatever the buyers and sellers come to an agreement on what the price should be, that's the price. So I don't want to say it's mispriced, but in the stock market, we're always looking for value, right? We want to look for someone selling something that we think is more valuable than they're selling it for. So we're taking a chance on that. And I just thought this was intriguing. And, it's 60 days from now, anything could happen. And the only thing that I don't like about, let me just set it up again. The other thing that I don't like about credit spreads in MicroStrategy, I've done a few of them, but let's just look. Let's say that the market was open and I wanted to try to get this to fill. The bid-ask spread is $6 wide because you have to combine the bid-ask spread on both legs of the options. and they're going to go out and try to find you someone to fill both of these legs. But it's a hell of a lot harder than just trying to fill one. And this bid-ask spread on a single leg is pretty shitty to begin with. I know there's a lot, there's a lot of volume, there's a lot of open interest, and you'll get a fill, if you, if I try to buy this for 5, I might have to put it back in for 6, and then I might have to put it in for 625, and then I might have to put it in for 650. At some point, you'll get a fill, as you get closer and closer to 830. But in order to profit on a trade, you have to be able to close the trade. So the number one, in my opinion, the number one thing to worry about in the stock market is position size. You don't want any one position to be able to wreck you. And that's kind of where the Kelly criterion comes in a little bit. The next biggest thing is liquidity. Just like I said, if the sellers think that an option is worth, $2,000 and there's no bidders, then the price is frickin' zero. So let's say you buy a long call, you buy the 700 strikes, and then on, January 16th, the price is $1,000 a share, and you're like, yay, I won. I want to sell this option, and nobody wants to buy it. Then, you still have a get out of jail free card because you can exercise it. But if there's any extrinsic value left on it, like if you wanted to sell it a month early, there's a whole bunch of time value in there, but nobody wants to buy it from you, then you're stuck exercising it, and you lose out on the extrinsic value. So I don't really like spreads in MicroStrategy because the bid-ask spreads are so atrocious. I hoped after the split that this would go away because it was always kind of bad, but it didn't. This extra liquidity has not helped the bid-ask spreads at all. And I don't know if that's just because it's so volatile. The market makers can't figure out what the hell to do with this. The algorithms are just struggling to keep up. But as soon as the market opens tomorrow, I will definitely take a look at this. And let me just take a peek at the chat, and then I'm gonna explore a couple of other strikes. So YouTube says, I'm thinking of doing a call spread far out of the money with strikes 50 apart, maybe with the 6 to 650 with expiration date all the way to April 2020 for fun. Now, are you saying a debit spread, or it's got to be a debit spread? Are you talking about a debit spread or a credit spread? Bullish or bearish? I'm assuming if you're watching my channel, it's going to be bullish, but Build Your CNC says, howdy. In Robinhood Legend, the mark is shown. I see you haven't gotten Legend yet. Yeah, I don't even know what the hell that is. I got to pay for that. Yeah, I'm displaying the mark price. There's a setting, I think if you go into your account settings, you can decide whether you want to display the mark price here, and I did update that, but yeah, BM. Okay, yeah, that makes sense. Yeah, that'll be fun. And that's plenty of time to be right as well. I don't really predict prices. I kind of feel like in the short term, I have no idea what's going to happen. But in the long term, like a year from now, I'm definitely on the number go up technology. But, for me, just YOLOing into 5 days to expiration, long calls, like, I don't know. This is risky to me. But there's a little bit of suspicion. This is completely just, rumor mill type stuff. Bitcoin, market is open 24/7. So Michael Saylor can only hit us at the market sales Monday through Friday during trading hours. So is it possible that's when the MicroStrategy dips will take place, and then we get like some weekend Bitcoin pumps because then he's lining his pockets full of dry powder And then he's just loading up on Bitcoin over the weekends, pumps the Bitcoin price. Then Monday morning, MSTR opens up. You know, it could happen, but I'm not betting the farm on it. But it would be kind of interesting to see if maybe a nice little pattern develops. So I'll just be kind of watching out for that. Oh, build says no, it's free and is a new feature. Nvidia has its earnings on the 20th. What do you think of an IV Crush entry with a leap? Oh, right after earnings? Okay, so let's check out Nvidia's implied vol chart. So Nvidia looks like a reasonable IV Crush play. So we're getting, options prices increasing, implied vol increasing. Boom, we get an IV Crush. Kind of creeping up here, but then IV Crush. We got increased implied vol. We got IV Crush. So I mean, Nvidia looks like a decent IV Crush play. I used to sell iron condors and stuff in this one for earnings, or potentially, if I was a little bit bullish, maybe I would just do uh, the put credit spread, or if I was a little bearish, I might just do the call credit spread instead of doing the whole iron condor. And I assume Nvidia's liquidity is pretty good. It's probably not hard to get fills. So I think IV Crush only. Okay, so belay my last. I was just thinking about an earnings play of like IV Crush affecting the options prices up until the next earnings. But if you're talking about IV Crush to buy a leaps, I don't think it matters. I don't think IV Crush affects any of these options prices that are like expirations way down the line. Months down the line, and a leaps is technically like a year from now. So I think IV Crush is mostly affecting like next week's options, maybe the week after. But I think there's diminishing returns on discounts for IV Crush the farther out you go. Like a year from now, I don't think those options prices give a crap about IV Crush. But maybe a small effect. But I don't think it's necessarily like, oh yeah, I gotta wait for the day after earnings to get the IV Crush discount on leaps. I don't think so. All right, AI Gone Wrong says spread is so wide a bus can drive through it. Saw this from somewhere. Yeah, that's awesome. Why Sailor buys? I assume he will be on the bid side wall, driving Bitcoin price down. Oh, when Sailor buys you, he will be on the bid side wall, driving Bitcoin price down. Why shouldn't that be up? All right, so thoughts on Ivy Crush for MicroStrategy. My peanut brain don't know how to think about Ivy Crush for MicroStrategy. Yeah, I looked at this one. For Ivy Crush, MicroStrategy is a trash chart. Like there's no way. I mean, I used to try it, but I don't see Ivy Crush happening here. There's no increase before earnings followed by a crash. There's no increase here followed by a crash. Like this is just collapsing from that March pump. So we got increased implied vol here from the price action and didn't have shit to do with earnings. Same thing here. It's just trending sideways and no IV crush. Trending sideways a little up maybe, but no IV crush, unless this counts as IV crush, but that's like a week later. So I don't think so. The MSTR chart for, counting on some kind of IV crush, it doesn't really seem to it's not being reflected in this chart, that's for sure. Oh, Build says you're doing live streams. How long have you been doing them? So I just started like last week. I tried it like months and months ago, and I can't remember which service I used. or maybe I wasn't even trying to restream servers, but I tried to, plug in my API into something, and I live streamed just like a black screen. I'm like, all right, I don't know what the hell I'm doing. But I talked to my brother, and he walked me through a couple of things. I almost got set up through, oh, I forget who it was, and I was going to use like um, NVIDIA to do like a fake green screen so that I could have my backgrounds, but I don't think my hardware could handle the AI that NVIDIA was using to basically green screen for me. So then that poo-pooed that idea. But Riverside seems to be working out well, and I was able to link YouTube and X both. Unfortunately, I think it's X doesn't participate in Omni Chat, so I have to have two screens open to watch both chats, which is a little bit of a pain in the ass. And then every once in a while, X chat just seems to disconnect, and it's like, all right, well, nobody wants to talk anymore, so I just ended the video. And then after I ended my live stream last time, it was like brrr, all the X chats popped up, and I'm like, what the fuck? So it's kind of fun. I like it, and I really like live streaming during when the market is open, because not that I'm, it's not financial advice. I'm not doing this specifically so people can copy trade, but sometimes I would record during the market, and then I would just hurry up and immediately post it so it would at least be relevant to what's going on. So being able to live stream while the market is open is kind of cool. And, I'm sure people are out there that have billions of dollars could manipulate the market, but they're not watching my channel and trying to manipulate MicroStrategy's price so that they can they can screw over a couple of my trades. So I'm not worried about me letting the cat out of the bag and like somebody being able to take advantage of my trades. I don't use stop losses, number one. I mean, I could potentially have a stop loss that I keep in my head, but I never put them into the exchange. Like, for the most part, if I buy a call, I'm just okay with winning or losing. I either just, print or die, right? It's either a winner or a loser. And I mean, if I'm pretty sure it's a loser and I can, scrape together like a little, close it early and just collect a little, bit of money maybe for damage control, I may do that. But usually if I'm going to have a stop loss, I just keep that in my head. I don't like, I think some market makers or some people with that want to manipulate the market, I think they do kind of manipulate the market just enough to trigger people's stops, and then they'll pump the price back up. I think that's probably a real thing, but I don't know if that's just me being a conspiracy theorist and ultra paranoid, paranoid crypto anarchist. Oh, Build says the fake green screens don't look good. Okay. Yeah, I mean, I got my little fake background right now, and you can see it like makes my head shaped funny because it's trying to trying to put something, but I don't want you to see the bed behind me that's barely made, and the closet door open with my dirty clothes basket spilling over. So you're welcome, AI. Doom Angel, ever think about streaming on Twitch? I actually have been thinking about it. Now that I got this working, I got it working for X, and now I got it working for YouTube. I can add more channels, and I saw that Twitch was one. And I actually used to stream on Twitch, but it was just my Magic the Gathering online games. Um, and I actually enjoyed that. But I'm a gamer, and I have a bit of an addictive personality, so that was just kind of a way that I could justify my addiction. Like, hey, I'm just doing it for the channel. I'm gonna build my gaming online persona, and I'll be a professional Twitch streamer. And but it was really just justifying me, just spending hour after hour playing video games and buying gems and shit. So that was Cope. But yeah, I may add Twitch as well. Like, why not? AIX says Gamma Wall is real, especially when option volume is large. SPX NDX. Okay. Satoshi's little bro says making any moves this week or just watching. Well, I just went over, and I have the guy's channel bookmarked, so I will definitely link his video in the comments. Well, I link it on in the comments on X. So if you're watching on YouTube, sometimes I don't really see. YouTube has a shitty way of doing notifications, so I don't always see all of the comments. I do try to answer every comment, but sometimes I go back through my videos and I'm like, I don't remember seeing this comment because I don't know if YouTube notified me or not. But for sure, I'll put the link in the X post, and if I remember, I'll do it on YouTube. But usually, I'll just type everything up in X, and then I just copy all, and I just paste that into YouTube. I don't edit my videos. I try to just make this as low maintenance as possible. I jump on here, I record, I let it process, I export the damn thing. Eventually, maybe I'll start editing and try to make the videos, I guess, experience cooler, better, or whatever. But at this point, like, there's only so many friggin' hours in the day. And I haven't quit my real job, my air quotes real job, yet. But I think my days are numbered. So once that happens, I may have more time to put into just polishing this stuff. But I'm actually kind of like, public speaking is kind of terrifying, to be completely honest. So I'm hoping by now that that doesn't come through in the videos. But when I decided I was going to do this, I'm like, you know what? I'm just going to make a friggin' video every single day until this isn't scary anymore. And it's definitely worked. Like, I can just go in with a half-assed idea, click record, and then talk for half an hour. Like, I can just do that at will now. So that's pretty cool. So maybe it's working. But now that I'm over that, I probably do need to, like, clean stuff up. And I think they've got AI that'll cut the dead space out and just, shorten the video so people aren't wasting their time listening to nothing. And I think somebody said they got kicked out of the YouTube live, maybe because of the copyright strike on the music I put at the beginning. And I didn't think that would matter because I'm not monetized or anything. So I'm like, what are you going to copyright strike me for? Like, I'm not making any money. So, but maybe. I don't know. I don't know if the algorithms are like listening for copyrighted music and then they'll flag me or whatever. Who knows? If I ever get monetized, maybe I'll have to worry about it. But worst case scenario, I guess, is I can play the music at the beginning of the live, and then when I re-upload it, I can just edit out the first 2 minutes. But it takes me a couple of minutes to, like, get into my live, and for some reason on YouTube, I still barely know what the hell I'm doing because I just started streaming to YouTube. And, like, I can find my live, but then I'm like, how do I get into the comments? So I'm just like, I'm knuckle fucking the keyboard until I can actually figure out how to even do this. So hopefully it'll get a little bit more professional looking at some point. Okay, so Build says options are hard for a lot of people, and these live streams are great to get an intuition about them. I hope so. That's why I'm doing it, and I literally document every single trade on the live. And at first, I was like, yeah, whatever. Nobody's watching these anyway. Like, I'd go to my video and it's got like one view, but that's because because I clicked on it. But now, I mean, I'm not saying I'm like have millions of views or anything, but I have my my account numbers are blurred. Like on Tasty Trade, you can click like privacy mode or whatever. But this started to make me a little bit nervous. Like my face is on camera and I'm actually literally showing how much my account was worth. So I'm not sure how nervous I should be of a wrench attack at this point, but I got a $50 wrench, so I guess I'm prepared. $50 wrench defense. Yeah, fake backgrounds and funny shaped heads, Mikhail says. Build says, it's hard to get viewers on Twitch for me. My YouTube live streams are gaining faster than Twitch, but my niche is electronics, not gaming. Oh, cool. Yeah, my real job is a very niche IT software. It's like electronic medical record software, but it's not even like the whole medical record. It's just the laboratory software. So I work in IT, but I couldn't fix your computer, and nobody gives a shit about it. So I'm definitely not starting a channel around that. So you said studio comments much better. Build says low maintenance equals smart. Yeah. And you can use DaVinci to remove silent portions. I'll remember that. Yeah, I got to look and see. Hopefully AI can just automate a bunch of this crap, because I don't want to do this and make it a slog. Like, I just want to have fun with it. And I don't even have enough impressions to get paid by Elon Musk on X. So we'll see. Yeah, I do plan on keeping on doing it. Bill says, ping me. I will help you if you need it. Super. Oh, Mikhail says, wow, not even monetized, so it's all love. Yeah, I had a little bit of a, like, in the back of my mind, I'm like, all right, maybe one day if I can quit my job, this will just be like some kind of income stream. But, I see some people's X payouts and it's like $50 a month. So it's not like, okay, I'm not buying groceries with that shit. That'll just be like 0.0001 Bitcoin or something. But yeah, I mean, I won't turn it down if YouTube or X ever wants to send me a couple dollars, but yeah, my goal is basically to just make money in the stock market, and the money from here will just be whatever it is, if it ever happens. So Satoshi's little bro says, you got a net worth number before you quit. So it's hilarious. So I was following a lot of TradFi guys, and a few of them are dividend investors, and that shit makes me laugh. There's some of their engagement posts would be like, "Could you retire on 5 million?" And I'm like, "Are you fucking serious? I could retire on 500,000." Like, oh my god. I was work optional about 6 months ago. My covered call income, basically went over my W-2 income. And I work in IT, so, I make decent money. It's not like I'm struggling or anything. But, if all I had is 100 shares of MicroStrategy, if I want to sell at the money, I can make 2,400 a week. Now, that would be insanity, because that would just, I'm thinking MicroStrategy goes up 4 or 5x from here. Like, I'd be disappointed if MicroStrategy is under 1,000 this time next year. Not financial advice and not price targets, but I do have a number in my head that bear cased or whatever. And so if I just was like satisfied with not having no upside, like 2,400 a week, $1,000 a week is 50 grand a year. So this is over 100,000 if I only had 100 shares. So, even putting in, like, let's go up to let's make it $1,000 a week. So what strikes could I get? Now look, this is not static either, because MicroStrategy's Ivy rank is 80 right now. And that means, this is like way high and normal. So the options prices are way more than they normally are. So this amount of premium, you can't count on this and be like, oh yeah, I'll get $1,000 a week forever, right? Like, not necessarily. Slow your roll. I would say they're probably double what I've seen in the past, but still, even if this 1,000 gets cut in half, that's just 200 shares to make 1,000 a week, and that's accounting for Well, from 340 to 400 is $60 in callaway value. So that's like, 10% would be 34. So that's like 15% callaway value and still $1,000 $1,000 a week. It's pretty ridiculous right now. But I'm going to be very strategic. I used to sell covered calls mechanically, right? In this account, in my main account, I've got the 1,500 shares. Oh, so you know what? I like to get off on tangents, but the basically the number, I feel like I could have retired on 500,000. When my account went to 500,000, I thought, okay, you know what? If I collect 1% a week, that's like 5,000 a week. And worst case scenario, if the price of MicroStrategy collapsed 50%, that's like 2,500 a week. Like I'm not going to live lavish on 2,500 a week, but I'm also not going to lose my house, and I'm going to be able to buy groceries. So when these dividend traders are like, could you retire around 5 million? I'm like, dude, 10% of that and I am good to go. Now that's living on the edge a little bit because, if I miscalculate and MicroStrategy crashes 75%, if I started at 500,000, that would be cutting it real damn close. But yeah, but I have a little bit of a high tolerance for risk as well. When I told that to my wife, she was like, nah, you might want to double that number and then you can quit. So yeah, it ain't going to be too much longer. All right, Doom Angel, what do you look for when you want to roll up a call? Roll up a call. So I've got some deep in the money calls I'm holding on MSTX for a long time. I see upside. Would you roll it up? So I don't like any of the managed products. I hate paying management fees. So I haven't studied MSTX any more than just, I can't remember if it's the 1.5x leverage one or if it's the 2x leverage one. And the reason why they scare me a little bit is, and I don't have any reason to believe that this guy wasn't telling the truth or was wrong, because he seemed to be pretty smart. But the way they described it is these things get repriced like every single day, I think. So if the price of the underlying goes up $10 today, you make a bunch of money. And then they reprice everything, or, recalibrate whatever. And then the next day, if the price goes down $10, you would think you'd be back to break even, but somehow you're down. And I don't know if that's the management fee. There's some kind of decay built into those leverage products that gave me pause. So, for me, if I want 1.5x leverage, then I just go buy some calls. Yeah, these are still leaps, right? So I'm just going to go. Why are my deltas 0? All right, so Tasty Trade is not updating, of course. Maybe it's the weekend or maybe it's my computer, but let's just see if Robinhood's got deltas. Yeah, I would probably just, this is me personally, just talking about what I would do if I wanted leverage. I mean, I can get 2 of these 300 strike calls for 16, was it 32? Yeah, I mean, basically the same price as 100 shares. And I'm getting 0.77 delta times 2, so that's 15.5, right? So that's 1.5 delta. So if I get 2 of these long calls, now I have 1.5x leverage. So I don't like any of the leveraged ETFs. I would rather just go and make my own leverage. But I don't even remember what the question was. Let me try to answer the damn question. So you're deep in the money. And that's the other thing. From what I've heard and some of the other option sellers and option buyers, is the way that they talk about these leverage plays is you get in, and if you make some money, you get out because of the decay. So because of the decay, it's not something to necessarily hold for long periods of time. There's some kind of risk, and I apologize, I can't fully describe that risk, but it's something to do with the decay and how they reprice things. So if you have in the money calls, and I assume they're in profit, me personally, I would take my profits and do something else with it. I prefer the underlying. I prefer doing something with MicroStrategy, and if I want leverage, I get into some options. But I definitely see upside. So, okay, and so you see more upside. Would you roll up? So that is the exact strategy that I'm doing on these options here. I can't remember, did you say when they expire? No. But I've got different long calls for different expiration dates, and my plan is to play each one of them completely different. So I've got some Januaries. These are out of the money, and they've been out of the money the whole time I bought them, but they are in profit. Um, I, if I can exercise these, that would be great, but I'm not counting on it. Like, I'm just looking for opportunities to take profits here. So this is not like, yeah, I know damn well these are going to be 700 in January and I'm going to exercise these bad boys. That's not kind of what these are about. But these that are not quite leaps, I bought them when they were about 180 days to expiration. So my plan with these is to every 90 days roll them back out to 180, and I'm just going to go to the top of the orders chain, and I'm going to do that all of 2025. Now, every time that the price dips, these are going to get completely wrecked, but I will probably try to DCA into them when that happens. And the reason I want to do that is because at the top of the chain, well, of course, fucking deltas are missing. All right. At the top of the chain, that's where the most delta per dollar can be purchased. So just like you want, the cheapest gas per per gallon, right? I'm looking for the cheapest delta per dollar. And delta, is smaller at the top of the chain, but so is the price. So if I want, 100 delta, I can buy, well, at the money, right? I can only get, let me do 325. Yeah, 0.75 delta. So now I'm doing freaking fractions, right? So let's do two of these. Two of these is going to cost me 320, right? And that's going to get me 1.5 delta. But all the way at the top of the chain, I can get three of these for 1.5 delta, and that's 270. So 270 is what? 50 cheaper than 320. So, I'm not saying this is a guaranteed winner, because if MicroStrategy doesn't print, like if MicroStrategy is not going up throughout 2025, then this strategy will be a complete disaster, right? So every time these start to get in the money, and every time they get, down to 90 days to expiration, they start getting a little bit too close for comfort, because that's when theta really starts to accelerate under 90 days, especially at 45 days. So I'm going to take these 180s. I'm going to, at 90 days to expiration, roll them out to 180 again. And I'm just going to go right to the top of the chain, get the most delta I can for the cheapest amount of money. And then just keep doing it. I can roll in January, then I'll roll in April, then I'll roll in May, June, July. And then I probably won't roll August, September, October. I probably won't roll in October. I'll probably just be done with that strategy at that point. But absolutely, I think if you think there's upside, then I think the trade-off for rolling up makes sense. It's just that theta is higher on the high strikes. So when you roll up, theta is going to decay better. There's no perfect option. There's only trade-offs. So, my personal preference was to look for the most delta I can get per dollar. But at the same time, theta is higher. So you're taking a bit of a risk that the option will decay faster than MicroStrategy's price can rally. So that's a concern that you'll have to decide. Oh, Satoshi, you forgot to ask my question about if you're making any moves this week. Oh yeah. I should just call this the tangent investor. So I discussed this video that I watched, right? So the guy, I'm definitely going to take a look at this on Monday. If the price gaps up to 370 or 400, I will be selling more covered calls. So that's automatic. That's going to happen. But I'm definitely going to take a look at this call debit spread that this guy, not December, he was looking at January. So I'll just go over this again. I'm going to look at these Monday on the open and see if it's still true. But this only costs $5. And the delta on the lower strike is 0.28. So they're basically saying there's like a 25% chance of this, being in profit. But this delta is just an approximation. So this isn't like law that this has to happen, right? It's just they're just running it through a freaking algorithm and it's just spitting out guesses. But if this delta is accurate and this wins 25% of the time, then that means that this is pretty cheap. Like this should cost $25, right? If the delta's, or $28. If this was priced, perfectly according to the percent chance that it would be a winner or loser, then this should cost $27.94 for this option here. And it's only $5. So if this kind of holds up on Monday, I will definitely be looking at this. And spreads, I don't like to be more than about 2% of my total portfolio. So it's not like I'll be like YOLOing into these, but it's kind of interesting. But the other thing that I was saying too is I hate spreads in MicroStrategy because the bid ask is freaking $6 wide. So it's going to be a pain in the ass to, it says that you're going to be able to buy this for $5. You ain't going to be able to get it for $5 freaking dollars. There's no way. You'll probably have to walk it up to $6, $7 to be able to get a fill. I'll be pleasantly surprised if it fills for $5, but when the bid-ask spread is this wide, it's hard to get into a trade. And even if this wins, the only way to profit on a trade is you have to be able to close the damn trade. So you get screwed on the bid-ask getting in, you get screwed on the bid-ask getting out. So you have to make enough money to make it worth the frickin' fees. So yeah, I'll be selling covered calls when the price hits 370, 400-ish. And I will be taking a look at this. I saw a guy's video and he was going over this and I was like, I double checked all his math and it seemed to be pretty legit. AI says IT is cool stuff, low stress maintenance, don't quit. Oh no, I'm out. Jonathan says you're good at public speaking, keep it up. I appreciate that. Thank you, sir. AI moved to West Coast, option trades at 6:30 to 10, 9 to 5 job for healthcare. Yeah, that makes sense. East Coast does kind of sucks with the schedule. Let's see here. Yeah, Build says I could retire on 200,000. Yeah, it would be cutting it close, but like dividend, they figure what, like 5% interest or something. So no wonder they need 5 million. Like that's ridiculous. Yeah, option traders could retire with your eyes closed with 5 million. No shit. R. Hild says, catching the tail end today. I'm slightly behind you, but exactly my thoughts about retiring. Good luck. I'm rooting for you. Mikhail says, do your thing, bro. My goal is also to make money in the markets. So far at 2 mil. All retirement money, though, so can't use it now. Yeah, I freaking hate my IRA. Somebody was telling me maybe I need to just turn it over into, just pay the fees and convert it to a Roth. And I got to look into it because I love trading in my IRA because I don't pay taxes on it, right? So I can just, man, I jump into a stock, I jump out of the stock, I'll scalp on a, a call and roll it. And I love not having to worry about the capital gains taxes. But I kind of feel like, when am I ever going to see this money? Like, it just pisses me off. So I had to take a look at that. Maybe switch it over to a Roth. I don't know. Oh, Bill says Robinhood Legend shows just like Tasty Trade. No kidding. Okay, definitely checking that out. Appreciate it. Flux says, I do not see this talked about much or I miss it. What is your exit strategy, if any, if we assume a Bitcoin bear cycle and how it will affect MicroStrategy? Yeah, so pre-split, I had 300 shares of MicroStrategy, so I don't want to exit with less than 3,000, post-split shares. And that doesn't make any sense other than just my pride being injured because I got 100 shares called away in March when I had the price was 1,200. I had the 1,400 strikes. The price ripped to 1,700, and I paid to roll two of them, like 25, 30 grand each. And I exercised, or I let the other 100 shares get called away, basically to pay for all of that nonsense. So I'm playing a little bit of a revenge fantasy game right now. But that's kind of a goal. I want to exercise like enough to get back to 3,000 shares, post split shares. So I'll be exercising some of these. This is the other strategy. So I said I had the Januaries. That's a different strategy than these Aprils, which is also a different strategy than these December 19th leaps. So my exit strategy on January and these Aprils is just profit. I'm going to buy the calls. I'm going to sell the calls. I probably don't. Well, I know for a fact I'll never exercise these because they'll never be in the money. If they ever get close to being in the money, I'm just going to be rolling them up anyway. So there's going to be no exercising here. But these Decembers, I'm going to exercise as many as I can and make sure that I have no margin risk. So I'm using about 30,000 in margin right now. So I'm taking profits until there's no margin. I will have zero margin risk. I borrowed like 100 grand in signature loans and against my HELOC and all kinds of degen shit. So I got to take about 100,000 in profits there. Probably gonna have to take some more profits just to pay the taxes. And once all of that is done, I'm gonna try to exercise as many as I can. And anything that's beyond that, I'm gonna take profits, and I'm not gonna keep dry powder in cash because cash pisses me off too. So anything extra that I have after I, hopefully get back to 3,000 shares, anything above that, I'm going to plow into Tesla. So that's the only other asset that I research that I'm actually bullish in. So Tesla and MicroStrategy is kind of my pairs trade. I still have my little, I sold all my Tesla shares off for MicroStrategy before the most recent earnings call. And I don't regret selling any of my Tesla, even though it's up double or whatever the hell it is, because my MicroStrategy's done well. Like, I can't complain. But yeah, I think Tesla's going to be my pairs trade for against MicroStrategy. So all the profits that I take in MicroStrategy next year is just going to all get plowed right into Tesla. And then hopefully they'll ramp up. They'll get FSD approval. They'll ramp up the robotaxis. They'll ramp up the 25K vehicle. They'll ramp up freaking humanoid robots. And they'll just take over the world. So that's my exit strategy. I will have no leverage and no debt end of 2025. AI says, oh, at Flux, if you have underlying, in my opinion, why bother exiting? Sell covered calls during the bear market, but easier said than done, especially if you are an emotional Bitcoin MicroStrategy maxi. Yeah, exactly. So that's the part that I forgot to mention is that assuming that the bear market does happen, I will be aggressively selling covered calls. So I have about 3,000 delta right here, and I'm only selling 1, 2, 3, 4 covered calls in this account, right? I could sell 15 against shares, and I could sell 5 more against these leaps, but I only have 4 on. End of 2025, I will be aggressively selling covered calls for sure. Satoshi's little bro says thoughts on Tasty Trade versus Robinhood versus Fidelity. I think I've got like $50 in a Fidelity account. If I don't have any activity on it, they'll probably just close my account and send me my $50 back. I've never placed a trade on it, I don't think. I love Robinhood's user interface. People clown on it because it's like, where all the rookies go to learn how to trade. But, it actually makes more sense. Like the options chain going up when you scroll up. If you're not an ancient options trader, like this just makes more sense than the way that most of these platforms have the freaking options chain. So Robinhood is very intuitive. I don't like the way that they do their margin calculation. I can never figure out if I actually have any money or not. So this is kind of stupid. But when I first started trading, I took like 70 grand out of my retirement at when I left my job, and I just started trading it myself, and kind of having an account where I'm kind of learning the ropes and I'm making kind of high frequency trades, right? It's not day trading, but buying and selling a bunch of covered calls every week, the fees add up. So I have a little bit of loyalty to Robinhood for the free trading that I was able to do while I'm learning the ropes. But I learned so much from Tasty Trade's videos and all of their research that I transferred most of my money in here because I just kind of feel like I'm giving them a tip. Like, they charge me every time I place a trade. But I feel like they kind of earned it. I do like the tools too. I like having Ivy rank, and I like being able to have my earnings on my tickers over here. And I actually kind of hate their tables though. The graphs here, I actually prefer Robinhood's. It's just so much simpler. But I don't have the slightest idea about Fidelity. Yeah, Gone Wrong says Tasty Trade, DX link data feed API is wonky during the weekend. Yeah. Nucleos just got on the live. Don't know if you discussed the potential of Saylor announcing he bought more Bitcoin. Also, Bitcoin usually pumps Sunday night into Monday. Do you see any significant price appreciation in MicroStrategy stock and options tomorrow? Yeah, I mentioned that a little bit earlier, and I'm kind of just waiting to see if there's a pattern. Like, obviously, he can only line his pockets with the selling shares Monday through Friday. So then, does he load up and then buys over the weekend and pumps up the price, and then MicroStrategy opens up higher, and then he can just go right back to at the ATM selling? I don't know if that's his master plan and that's what he's doing or not, but Bitcoin does trade 24/7, so he could be, he could be pumping his bags on the weekends by pumping the Bitcoin price up. Wouldn't surprise me. So Richard Hawes put a link in there. I'm not sure where that goes. Some kind of X post. Um, yeah, Satoshi Little Bro said cheapest delta per dollar. Yep. Do you know any good backtesting software? No. I'm gonna ask around the True North people. I know they're doing some backtesting. I was super excited because Tasty Trade has it now, but it was just like for a certain limited number of tickers. I tried to play with it today because I was like, "Oh, I'll do a video about Tasty Trade's backtesting," and I was like, I don't want to trade any of these stupid ass tickers. So I couldn't backtest MicroStrategy, so that was annoying. But yeah, I got to find something. All right, let me try to catch up on these chats, and then I think we're going to call it. So Doom Angel, the 30 strike calls on MSTX are up 1,000% and don't expire until 325. Holy shit. That is badass. Congrats. MSTX is the 2x leverage. It was 1.75 when you bought it. Oh, I thought that was in there. I thought they were mandated to try to keep it a certain amount of leverage. I didn't know it could change. So what's the strategy behind selling a covered call to retire on that? So for every 100 shares, I can go out here and either collect $2,500 at the money or build in some call away value and sell. Oh, sorry, that's a buy. 1,000 bucks a week, but still have 15% in call away value. Now the delta on this is 0.26. So it's not just printing money. Like 25% of the time, you should have your strikes breached. Now it's just a matter of whether this goes to 401 and this goes in the money, or does it go to 501 in the money and you have shares get called away. But if I have enough shares where I'm accumulating dry powder, on the 75% of the calls that do profit, hopefully those will pay for the occasional time when I have to pay to roll for. But that's assuming that the bear market continues. If it does, then I won't be paying to roll very many of these. Like my overall account value will be going down, but I would be selling covered calls against shares in order to generate income. I can go, every week or sell the 45 days to expiration ones, whatever looks interesting. Satoshi's little bro, I love my Roth IRA and HSA. Got to start shopping for some HSA eligible expenses if 2025 about to go as planned. Yeah, you're going to be buying a freaking sauna for your house. I don't know if that counts. They don't have a HSA at my job, so couldn't get in on that. I don't think they do. You're welcome, Flux. Absolutely. All right, Trevor says, I've heard you chat about poor man's covered calls before. I was researching these. Do you need a margin account to make these work to start off? Actually, no. And in a cash account, the poor man's covered calls is kind of a way to cheat and almost get margin leverage with still being in a cash account, because get rid of these. I was looking at these leaps a little earlier, right? If you want to create your own leveraged ETF, basically, you can get 0.74 delta for 160. So for 320 times 100, so 32,000, you can get 1.5 delta. But for about that same cost, you can only get 100 delta buying the shares. So if you buy a in the money leaps, that's at least 0.7 delta. Anything below that gets kind of dicey. A lot of people like to go to 0.8 delta. Is much safer, because then if the price drops and it goes down to 0.7, you're still kind of in the game. But if you buy the 0.7 and it drops to 0.6, it makes it real hard to continue to sell poor man's covered calls. And a quick word of warning. So I was printing money with these in 2020 and 2021, but when the Fed raised rates and we went into that bear market, I lost in 3 months all of the gains I had made in a year and a half. So just be aware that these are leveraged, and that's great when number go up, but the leverage is still in effect when the number goes down. So please be be just careful with position sizing and paying attention to the overall, macroeconomic environment. If the Fed starts talking about raising rates and the market could just go to shit, then it might be time to get out of leverage. So, but the point is, if you own one of these, and there's a formula for creating a safe one. So if you take the short strike minus the long strike, so this is the leaps I would be buying, and let's just go out to 40 days to expiration. If I take the short strike, and let's go all the way up to 500 for the hell of it. If I take the 500 strike minus the long strike, that's 175. 175 plus the value that I'm getting paid on the short strike, which is 25. So add that to the 175, that's 200. That amount should be greater than the price of the long call. If it does, this is quote unquote a safe poor man's covered call, meaning that this part of the graph stays green for any kind of conceivable price at expiration. And at infinity, you might end up losing money, but like here, this would be considered a reasonably safe poor man's covered call. When you own the shares, you can choose any damn strike you like. It's a completely defined risk trade, and and it doesn't matter how greedy you want to get with the premium or how greedy you want to be with the call away value. When you own the shares, the only thing that you're risking is having your shares called away. So you can't just expose yourself to infinite risk. But if you screw this up, if you say, oh, I got this poor man's covered call and I'm going to sell at the money, frickin', let me just go to like 1 week. I can print money now, right? For half price. Well, now, if the price goes to just 478, now granted, that's a pretty big ass increase in 1 week. But if it does go there, you start hemorrhaging money. And you can see that the losses become unlimited. So poor man's covered calls, you have to be very careful, know what the hell you're doing. There's a page called Blue Collar Investment or whatever. That's where I got this formula from. So it's not like I came up with that on my own. I definitely just pirated it from them. If I remember, I'll try to link it in the comments. All right, caught up on the X chat. Check YouTube. Sovereign says, I have a self-directed Roth set up with Bitcoin, about 14K. Was thinking of opening a brokerage and pivoting to MicroStrategy. I already own MicroStrategy in my 401k. So I know a lot of Bitcoin maxis would probably pull my orange pill card for saying this, but I've said it before. After I saw Quant Bros 1, I think it was right after, but at some point I was like, oh, screw this. I sold half of my Bitcoin stack. I moved it all into MicroStrategy. And like, some people were like, oh, you never sell your Bitcoin. I'm like, okay. But it's been sitting in cold storage gathering dust. And it gives me the comfort of knowing that I can flee the country on a moment's notice with my Bitcoin in my brain wallet. I get that. But beyond that, it's not doing me any good in there. The financial tools are not available that I can just live off that. So I'm not going to apologize for doing what I want with my freedom money. So yeah, I aped into a bunch of MicroStrategy, and I don't regret it yet. Knock on wood or whatever. But Bitcoin didn't get me to a place where I could quit my job, and MicroStrategy did. So I think there's plenty of upside to go, and I'm not telling you to do it, but I'm also not telling you not to do it. Do whatever the hell you want to do with your freedom money. That's my point. But I think a lot of Bitcoin maxis will try to guilt you into just, you can't sell your Bitcoin ever. And I'm a grown ass man. I do what I want to do. All right, Anthem Drums, what's going on? Just want to thank you. As a former futures degenerate gambler, I am not creating weekly options premium income and just love it. Thank you for all your videos. Yeah, glad to see you. You're very welcome. Oh, he says you am creating weekly premium. Oh, cool. Very cool. Mikhail, I'm one of those ancient options traders who still uses Fidelity. Been in Fidelity over 15 years. To be fair, Robinhood does look nicer. I'm just a dinosaur. Yeah, and that's it. So whatever you learn on, that's what you're going to be comfortable with forever, right? DWNFT. Hey, when you were discussing selling covered calls against your in the money long call, you're exercising. How can I make sure I get the cash from the covered call before the long call expires? Okay. So this covered call strategy, I'm not necessarily saying that I'm going to exercise this call. I absolutely could if I've got dry powder to do that, but I don't have to. Now, these, I'm fully anticipating at some point, these will be in the money. And that's the other part of my exit strategy. I guess I forgot to mention. People say that you can't time the top, and while that's true to a certain extent, I'm going to have 20 of these bad boys, and I'm going to need to sell, probably sell some of them to afford to exercise the rest. So starting in August-ish, maybe, or actually starting whenever the hell these are in the money and get to like a 0.7 delta, I'm going to start using these as collateral to sell poor man's covered calls. So at that time, let's just say that MicroStrategy is $7.50 a share, and I sell a covered call at $8.50 on one of them, and I sell another covered call for $900 or $9.50 on another. If the lower strike one goes in the money, then I'm just going to use that as my signal to exit that particular one, right? Instead of paying to roll it, I'll just close one short covered call and close one long in the money leaps at the exact same time. Use the long call to pay for the, to pay for the short that got wrecked, and then I'll keep the profits. And then at some point before December, as that keeps happening, like if the price went to 900 and then my 850 gets called away and my 950 doesn't, and I just collect all that money, then I put it back on, and I just keep doing that until as many of these get called away as I intend to exit. So I can sell weeklies until some of them get called away. And I'm not sure if I'm answering your question, but I think maybe I am. If I didn't, then ask a clarifying question. Next question is, you said if you have the same expiration for both covered call and long call. So I wouldn't do that. So I never sell covered calls. I never sell calls beyond 45 days to expiration. So I'm not, and the reason is because theta is so slow beyond 90 days to expiration that it doesn't even make sense to sell calls out that far to me. So I only sell, you can see that these covered calls are, some of them are, 33 days to expiration, and I've had them on for 11 days. So that's 44 days to expiration. I would say 60 is as long as I'll go out on selling a covered call. So if these are in the money in August, then I'm going to be selling somewhere in the weeklies in August, or I'll be selling like September's, September, maybe early October's. And then at some point, before December, I will stop selling covered calls on them and then just make a decision on what exit price I want. All right, it says you only have 100 shares and one long call, 380 December 2025. 380s. Okay, so 380s almost in the money. Yeah, I only had 100 shares in my IRA, and those 100 shares did get called away, and I didn't have enough money to keep 100 shares. So now I have 300 post split. But just be careful if those 100 shares are precious to you, if you're selling covered calls in them, the price can get away from you, and if you can't afford to roll, then they will get called away, and now you're, if MicroStrategy runs up 25% that week, they might be too expensive for you to even buy back in. So everybody has to be careful with the risk that they're willing to take with these. But if you're lucky, maybe the 380 would pay to roll the 100 shares. Like, I don't know. You might be able to get lucky with that. But so the December 2025. Yeah, I definitely wouldn't be selling covered calls out to December. I never go out past 60 days. No, absolutely not. I don't sell that far out. Theta, beyond 90 days, theta is so small. Like, when I'm selling a call, the whole point is for theta to drain the value out of the buyer's side of the contract into my side of the contract. And theta is just so slow. Like, I want that value to happen fast. Tasty Trades research says that at 45 days to expiration, theta is at its maximum acceleration. So anything under 45 days makes sense to me. Weeklies, you actually can generate the most premium. But so I will either do weeklies or I try to target weeklies or 45 days to expiration. But beyond that, it's just it's waiting way too long to profit from it, I guess, is kind of where I'm going with that. Sovereign says, thanks. I do not listen to Bitcoin maxis anymore. I like how you say it. Do whatever the heck you want with your freedom money. Exactly. Now, I did keep a small, stack, like in case of emergency break glass. Like, if I got to grab my family and get the hell out, I can restart somewhere if I have to. But I think the way that Grain mentioned it too, Grain of Salt was like, look, if I stack just so much Bitcoin on top of Bitcoin on top of Bitcoin, now there's like that custodial risk too. Like, I mean, you have to really be on your shit with, I've got half my passphrase in this geographical part of the country, and I've got another piece of my passphrase in this geographical part of the country. You just have to go through all of these great lengths to, secure this Bitcoin, especially when it gets to $500,000 a coin, $1 million a coin. It's like, people say not your keys, not your coins, but like at the same time, custodying it is not necessarily super, super complicated, but there is a carry cost to it, right? It's not free from a stress perspective. So he's like, nah, I'm done stacking Bitcoin. I think is the way that he said it, because he's like, look, I've got enough custodial freaking headaches to deal with, and it's easier for him to just, have his backup sats that, everybody knows it's the alpha asset on the planet. We're not arguing that point, but at some point, like, just this, I mean, I can't even imagine some of these people that just have so much, so many sats stacked and just paranoid that they're going to get hacked or, oh God, I don't want to think about it. Build says, always had a question about a covered call on a leaps. What if the covered call goes in the money? Yep. And you don't do anything. You will lose the leap and need to pay the difference to buy the option, right? So every exchange is going to be a little bit different. If you've got the money, then the exchange might just close it for you and just zap the money out of your account. They might exercise, and then when you wake up Monday morning, you kind of like you might like owe someone 100 shares. Um, but I think Tasty Trade warns you. It's like, okay, someone's exercised this option, you're at risk, and there's a way to highlight the shares and the covered call together, and then you close them in if you close them in the right ratio. Oh, but you're talking about the leaps. Yeah. Yeah, I do have these leaps as well too. So let me see. Yeah, I could probably just close this position in a balanced. All right, so, but let me just make sure I get your question right. What's up, Ben? Glad you can make it. So now, where's the damn question? Oh, there it is. Sorry. What if the cover calls go in the money? You don't do anything. Okay, so you should definitely do something. And Tasty Trade actually warns me on Friday morning if my poor man's covered calls short strikes are in the money. They're like, look, you're about to get exercised on. You don't have shares. What do you want to do? And I would basically just go in and manage it. So I'm going to close them both at the same time for a credit. But I don't know, every exchange is probably different. If you've got dry powder, they might just force you to go out at the market and buy the shares. I don't really know. Just don't let it happen. All right, Ben. Ben says, no need to pray for my family the next couple of weeks. I'll be staying far away from covered calls on MicroStrategy for a while. Yeah, I got in and out real quick. So when Ivy rank was up to like 85 and MSTR was at 350 or maybe 360, I sold a covered call and I bought it back like the next day for 30% cheaper than I sold it. So I just got in and out real quick. But yeah, I'm definitely getting wrecked on. Oops. Yeah, I'm getting wrecked on these in my IRA. I take more chances in my IRA because, like I said, I feel like I'll just never see the money, so I kind of just don't care. These were in the money just a week ago. No, not those. These were in the money a week ago. So I could get wrecked on these. We'll see. Doom, this has been helpful. Keep doing it. Thank you. Love you back. Nucleos, me too. At Ben, we'll wait for the bear market if there will be one. Doom Angel says passphrases become the one piece. Yeah. J94, you have March and June calls. Wish me luck, fellas. I know I should sell 30 days before expiration, depending on the price, to secure most gains before expiration dilutes my gains. I think that is a good plan. DWNFT, the long dated covered calls are enticing, but I will try your strategy of 45 days or so and under. Thanks again. Yeah, and so I think of everything. I even think of buying long calls from an option seller's perspective because that's how I got into it. And so when I'm selling options, I'm licking my lips at anything under 45 days. So I love selling the 45-day ones. Theta's high. I love selling the weeklies. The acceleration curve, I mean, it only has a week, right? There's the acceleration curve kind of doesn't even matter for theta because a week later, all the extrinsic value is gone. So if I flip that on its head, I'm buying leaps a year out because theta is slow and I don't want to lose value in my calls. So then in my brain, the short dated options are for selling and the long dated options are for buying. So I'm not going to I'm not going to sell a call out to 6 months, 9 months, a year out when those are the leaps that I feel like I should be buying. So it doesn't, I couldn't find a way to rationalize it. Now, there are some people out there that instead of buying shares, they do some kind of weird synthetic thing, and I kind of don't understand it, why it would make sense to want to do it. But some people will go out here and they'll sell a put and buy the call. And so you're getting 30 delta selling the put on the same strike, same expiration, and then you're getting 70 delta on the call that you bought, and it ends up being 1 delta, which is the exact same delta that you would get if you buy the shares. This is how MSTY creates synthetic stock to sell their covered calls against. And this is going to cost, what, 2,400? Is that right? But it didn't really seem to, I don't know. It didn't really seem to be much more of an advantage than just buying the shares in a margin account. So I don't know what the benefit of doing this is. Well, then again, if this only costs $2,400, oh, can I sell covered calls against this? I don't know. Maybe it doesn't make sense. I don't know. Maybe I need to look into it. Yeah, Bill says, in other words, PMCCs are super important to manage. Yes, it's very important to get it right when you open the trade. And then, yes, exactly. You're going to have to pay attention to it. When the short strike is about to expire, you have to be ready to make some money moves. All right, Doom says, love buying long calls greater than 45. Exactly. And AI says, long dated synthetic, out of the money longs. That's me. What's up, J64? The GOAT. Yeah, I appreciate it. Synthetic sounds interesting. Yeah, I need to do more research into it. And maybe this 330 strike. Yeah, they'd probably have to go way more in the money. So that's probably why it costs more. Let me delete this. So this was just me pulling strikes out of my ass. But, maybe they would have to go down to the 250. Yeah, see, that's costing more again, now. So I don't know how deep in the money you have to go with these in order to make them, where you can safely sell covered calls against. But you can see as it starts getting deeper in the money, the price is getting way more expensive. So this is already getting pretty close to what it would cost to buy 100 shares on margin. But when you're when you're an ETF and you've got, I don't know, however many millions of dollars they raised, I don't know. They've got a team that understands this, and I'm sure they're sizing everything appropriately. I know the people who have MSTY are happy with their dividends. I bought one share just so I could see what the dividends were, and I was like, holy shit. It's actually a lot. I was kind of surprised. But I hate everything with a management fee, so I sold my share. My lonely ass share. All right, last question, then I'm caught up, and then I am out of here. J94, is there in any way, shape, or form that MicroStrategy can fail? Like, is their Bitcoin really secured? Imagine they lose the password or something. So when we started the True North calls, this was one of the first things that I wanted to talk about, and some of the comments were asking for it as well. So we are looking at having someone steelman the bear case. I think that's a responsible thing to do. So I love the question. I think Ryan volunteered to do it, but if not, I just volunteered him to do it. And I'll say this now. I've been kind of sitting on it, but I saw a Jeff Booth interview, and he had the only criticism that perked my ears up of what Michael Saylor is doing. And he actually said that he disagrees with Saylor about being able to generate yield. And I'm not talking about Bitcoin yield, the metric that they've come across. I think what he meant was like the argument that Saylor had with Saifedean, that type of yield. And I have to research it more, but the kind of TLDR version was, and he only talked about it for like a minute. But his thesis was that the only way to give people the best interest rates, right? If once there becomes competition, if one company's offering 5% yield, then another one undercuts them to 4, and then someone undercuts to 3, and then someone undercuts to 2. The only way that you can get more and more going the other way around. Offering yield is like, okay, can you get 5%? Can you get 6%? Can you get 7%? The only way to beat the competition is to start hypothecating. And that's why the current credit-based system is so fucked, is that competition causes people to take risks. And right now, MicroStrategy is being very responsible with their risk. They're only exposing themselves to like 25% leverage on 100% of their assets. But if they got into a yield competition with other people offering Bitcoin yield as well, does that cause someone to become too reckless with the amount of leverage that they take? I trust Saylor with it at this point, but if I saw something like that happening, I'd be like, nah, you guys are going to get wrecked. And I might start exiting my positions, because I'm thinking, nah, if they get into the hypothecation game, which is like anti-Bitcoin, right? But I think that's like a 1% chance of that happening in the next 10, 20 years. So this is definitely like a decades long investment for me. I'm not saying I'm going to exit these positions in 6 months because I'm afraid this is going to happen. But yeah, there's all kinds of existential risks to MicroStrategy. Michael Saylor is very important. I think he's probably has the highest key man risk of any CEO in the entire stock market. The rest of the company probably knows what to do if he wasn't around, but like, he's just a charismatic figure, and he's so transparent that I think it would be, at least on the short term, a big hit. So there's all kinds of things that could happen to MicroStrategy if the next government is hostile to Bitcoin or hostile to MicroStrategy. Could they do something to injure the company? There's all kinds of crazy shit that can happen, but nothing that really scares me out of the position right now. Doom says, chances of Saylor getting litigation against him for what he is doing. I have no idea, but is it feasible? Hey, lawyers make money when they sue people, right? So I'm assuming that the chances of getting sued are probably very likely, but I'm sure their lawyers are already writing up the briefs, countering the countersuit, forming the countersuits. So it's all just part of the business of having a publicly traded company, I think. "12 years." Forrester says 12 years of Vance. Yeah, yeah. That would be a safe 12 years, I think. So maybe we'll end it on that. Thanks everybody for joining in. I love the frickin' chat, and hope you enjoyed it. Be good, y'all.